Hey, welcome back to my channel, guys. Regardless of our income, taxes are quite terrible for all of us. And, more importantly, if you're the owner of a small business that has just turned a profit after 2 years of losses, handing that money over to the government is something you'll remember for a long time, because you know that money could be your savior the following year when you again experience losses. But while on one side there are people like you and me who sincerely pay their taxes, on the other side, there are companies like Google, Microsoft, and Apple who used a genius tactic by which they saved thousands of crores of taxes every single year. While Google saved $23 billion, Apple saved $78 billion, and Microsoft saved $13.8 billion 2017 and 18. As you can see, this is more than twice India's defense expenditure. What is this brilliant tax avoidance scheme, exactly? How do they get around the taxation system's tight rules? Last but not least, what study materials are available to assist you comprehend these tax evasion tactics devised by the world's brightest minds? In Irish Dutch sandwich. No, it's not a sandwich but a genius strategy by which Google and Microsoft saved billions of dollars in taxes. You see, if you're a US resident corporation, then you have to pay a total of 21% in company taxes. This is a source of revenue for the federal government. So, let's pretend Google is your company, and it's a software company that sells software to international corporations. Then, while doing business, Google generated $20 billion in revenue in fiscal year 2016. Remember that you're only taxed on your profits. So, after subtracting expenses, Google's profit is $2 billion. Now, obviously you're extremely happy until you realize that you have to pay 21% in corporate taxes to the government, which is $420 million. Now this leaves you with just $1.58 billion. But, as it turns out, you can actually save this entire $420 million of your profit. The question is how. Let's take the same company, Googling, that is into selling software. They have now established a firm in Ireland called Irish Googling to operate in the United Kingdom, and this company is a direct subsidy of Google in the United States. When this is done right away, Google's tax rate reduces from 21% to just 12.5%, the Irish corporate tax rate. Why? Because the company is treated as an Irish corporation in the United States, because tax residency is determined by the jurisdiction of incorporation, according to U.S. tax law, as in you will be taxed on the basis of where your company is incorporated, which in this case is Ireland. But this is where the first hurdle comes in as per Irish tax laws. If this Irish corporation is being controlled in another jurisdiction, then the profits will only be taxed in that jurisdiction. So since your Irish Google is being controlled by the U.S. Google, then the tax applied will be that of the US. So guess what? Although the parent company of Irish Googly is US Googly, the US Googly cleverly sets up a special controlling company in Bermuda called Bermuda Googly. Why Bermuda? Because in Bermuda there is 0% tax. Yes, you heard that right? 0%. So now, since this company is managed and controlled from Bermuda, it is considered to be a resident in Bermuda for Irish tax purposes. So now you are only paying tax in Bermuda, which is 0. As a result, you pay no tax at all. Bermuda is known as the world's tax shelter for this reason. So the job is completed over here for a savings of $20 million. Wait a minute. Because, in brief, the United States authorities are not stupid. The Controlled Foreign Corporation Rules, or CFC, stipulate that if a U.S. firm's subsidy is controlled by another company in another country, then the U.S. company's subsidy is also controlled by another company in another country. They will have to pay taxes in the US in this case. Since the Irish Google is an American company's subsidiary but is being controlled by a company in Bermuda, the taxes will again be applied by law. So obviously, although this model clearly does not fit the objective, it is nevertheless a substantial investment at $20. This is when the double Irish-Dutch sandwich comes into play. 2 Irish companies and 1 Dutch company are sandwiched between them, as the name implies. Let's see how this plays out. The first step for Google is to get around the CFC laws. So this time they create Omega Ireland Ventures, an Irish subsidy with a controlling position in Ireland. Because the controlling firm is now based in Ireland, the CFC regulations no longer apply. But if done so, Omega will have to pay 12.5% corporate tax on its profits as per Irish corporate tax rate. So here's where Omega then proceeds to create another Irish subsidy, Omega Properties, and gives its controlling presence to Bermuda. Now, since this is an Irish subsidy and not a U.S. subsidy, It has easily escaped the CFC rules. And what Google does now is that they sell all the intellectual property like patents, brand names and copyrights to this company called Omega Properties. So how many companies do we have? 3. Googly, the parent company based out of the US, Omega Island Ventures, the Ireland company controlled in Ireland, and then Omega Properties, which is operating from Ireland but is controlled from Bermuda. Now watch this very, very carefully. Let's say Omega Ireland Ventures works like a normal company and makes a total sales of $1 billion, $200 million. Here, expenses will be $800 million and revenues will be $200 million. Here's where they add an extra expense, the cost of patents and licensing, for which they paid $200 million to Ireland Properties because they used Ireland Properties' intellectual property, implying that this company earns no earnings and hence no tax. And since Omega Properties is being controlled in Bermuda, it again incurs zero tax. Why? If you remember, as per Irish tax laws, if this Irish entity or corporation is being controlled in another jurisdiction, then the profits will only be taxed in that jurisdiction. But this is where another hurdle came up in the form of something called the Irish withholding tax structure, wherein Irish resident companies must be told tax on dividends, payments and other distributions that they make within the country. So in simple words, when Omega Ireland Ventures pays a royalty to Omega Properties, they will be required to withhold 20% as part of the withholding tax. So, just when you thought Omega had taken care of everything, you were hit with a 20% tax bill. But guess what? This is where the Dutch portion of your sandwich comes in. You see, there's a tax loophole that states that most European Union countries will allow royalty payments to another European Union company to be made without being subject to the withholding tax. So, if you pay a royalty to an Irish corporation, you must do so in Irish currency. It will incur a 20% tax, but if you pay royalties to a Netherlands company or vice versa, there will be zero withholding tax. In fact, the Dutch tax code even allowed royalty payments to be made to several offshore tax havens like Bermuda without actually incurring this withholding tax. So guess what? Googly sets up another empty shell organization in the Netherlands called Omega Dutch Ventures. And now the Omega Island Ventures pays $200 million Omega Dutch Ventures without incurring any tax. And here's where the final stroke comes in. Omega Dutch Ventures then makes another $200 million of royalty payment to Omega Properties. And because this is also a transaction involving two European Union entities, there will be no withholding tax. Now, because Omega Properties is controlled from Bermuda, it is subject to Bermuda's jurisdictional tax, which is now $0. The double Irish-Dutch sandwich approach is utilized in this way to save hundreds of millions of dollars in taxes. Now, in case of Google in 2017, according to reports, Google reportedly transferred on negation $19.9 billion or roughly $22 billion through a Dutch company, which was then forwarded to an Google, but Apple, Facebook, Fighter, Microsoft and dozens of other billion-dollar companies have used this strategy to save billions of dollars in taxes, and the double Irish-Dutch sandwich is the largest tax avoidance tool in history. There are estimates that say that U.S. multinationals built up an untaxed offshore reserves of $1 trillion from 2004 to 2018. But fortunately or unfortunately, the Irish government came in and decided to put an end to this double Irish-Dutch sandwich strategy. So now you can no longer use this strategy to evade taxes. Thank you so much for watching. I will see you in the next one. Bye bye.